By way of introduction, my name is Chuck Sisk, and it's my honor to be the chairman of the board for the RTD. Having said that, I represent certainly the other 14 directors who are just absolutely wonderful and should be up here with me as well. As some of you are seeing for the first time, the brand new Union Station bus concourse. We had a gala last night. It's unbelievable what's happened and how this has transformed Denver and the Denver metropolitan area. As you may be aware, it's a secret, but this is really a special day for the grand opening, and it's really something that we're going to have a full day of activities, and really hope that you can stay to join us. And certainly the activities you're here to partake in today right now are really important in terms of our panel. The round tables will continue until about 11 o'clock, and then we're going to invite you up to the plaza and start taking in all the food trucks and other festivities with the grand opening ceremony to start at high noon. One of the things that's not being told to me, but that has particular interest for some of us is that there's going to be a beer garden going on. But that wasn't on my script. I wasn't supposed to mention that this early in the morning, but it's there. So it's really an incredibly important day for us to discuss the partnerships that have evolved. As you may be aware, you're probably not aware fully, that the Denver Union Station is really a collaboration of many partnerships, private and public, that made this happen, and it's certainly a result of many individuals that contributed mightily to making this happen. At the inception, RTD partnered with the City and County of Denver, the Colorado Department of Transportation, Denver Regional Council of Governments, to purchase Denver Union Station and to save it from something other than what may have happened to it, but we have an historic intended use now as a result of the foresight by these many people that said this is important for us to maintain. Then there was a partnership done with the Denver Union Station Project Authority, known as DUSPA, which has represented the Union Station partners as an oversight entity for the redevelopment. Incredible, again, partnership. The cohesion that has been made and entered, it's just absolutely phenomenal. And then we needed to find out how to fund this project, which of course was no small task. And that was part of what happened in terms of seeking federal funding, state funding, private funding, and at last count there were 11 different funding sources, 11 different funding sources to allow this Union Station to come to where it is today. And it is in fact the culmination of and fruition of vision and determination of public and private partners that would allow this to occur and say, we can do better in Denver. We can make this not only the Queen City, but the prime city for the United States and even internationally in terms of transportation. And then we talk about vision, we talk about what's happened. Certainly, we remember the opening, and I was there at the opening of Denver International Airport. And what again, the foresight that we had. And so that really blends and allows me to introduce our first guest, who is again a person that is one of the real true visionaries, and really challenged Denver and Colorado to say, imagine a great city. Imagine a great city. Gentlemen, I'm honored to introduce, really set the stage for Denver to have a world-class airport while serving as the mayor of Denver, and of course I'm prejudiced to mayors. And then he went on to be the Secretary of Transportation as well as the Secretary of Energy. So, ladies and gentlemen, it is really a great pleasure for me to introduce to you the Honorable Federico Peña.
Good morning. Thank you very much, Chuck. Good morning, everybody. First of all, thank you, Chuck, for that terrific introduction. And can we just for a moment thank all of the members of the Regional Transportation District Board of Directors, because, you know, they really serve as citizens. essentially pro bono, right? So give them all a round of applause, and Chuck, thank you for your leadership. Well done. Well done. Looking at the audience here, I know I saw a number of you last night. You're here early in the morning, so we were able both to celebrate a terrific event last night, but we're here this morning back to work. And it's great to see this kind of a turnout, which extends all the way to the back of the room. Can you hear me in the back, by the way? Wonderful. My task this morning is somewhat simple, and that is to introduce our moderator, who will then introduce our panelists. But I was asked before doing that to share a few reflections on today's event and how we move forward. And so I thought I would do that, if only just for a few minutes. So please indulge a bit of my insight, I guess, in terms of what we're doing today with this panel. You know, last night I was able to see a lot of old friends, and I don't mean old in the sense of aged, but learned and mature and seasoned people. And as I talked to so many of you last night, what I saw was entrepreneurs, risk takers, visionaries, community leaders, people who believed in our Denver metropolitan area, people who were willing, for example, to believe in the creation of a lower downtown historic district, which caused so much of this part of the city to bloom. By the way, the Lodo district passed by one vote on city council many, many years ago, 25 years ago. I saw people last night who have always understood that, as the mayor said, we have been the queen city of the plains for generations, that for unique reasons we have been sort of the shining diamond in the plains, rising above all those around us. And that has been our history, and it will continue to be in our DNA for generations to come because of what we have done. Reflect on this for a moment. I'm going to go back a little bit in terms of history. Reflect on those decades ago business people who said, we want to make sure that Denver is not isolated in the West. And what did they do? They raised their own funds and ensured that a rail line was built from Wyoming all the way down to Denver, so we would be part of the rail system that was building America back then. And because of their vision, Denver rose as the center of transportation and finance and industry, where other cities could have equally have reached for that opportunity. But those visionaries and risk takers back then chose to make that risky decision for our benefit. I'm reminded of Mayor Spear, who launched the City Beautiful movement here in Denver, who brought to us all the boulevards and the parks and the neoclassical buildings that we celebrate here, that today all of us as citizens can rejoice and celebrate. And yet he was roundly criticized for his work back then. He was called wasteful. People suggested he was perhaps doing something on the side. But he had vision, and he had courage, and he moved forward with what he thought was best for future generations. And I'm reminded of Mayor Ben Stapleton. I'm going way back now. Who decided to build something called a municipal airport out in the woods, 7 miles from downtown. And he was criticized because people said nobody would ever use the airport. It was suggested that some of the land was owned by his friends. Maybe it was. It was called Stapleton's Folly. And yet he persevered. He persevered. And he built upon the legacy of those who came before him. And then we have built on the legacy of those who have come before us. And I'm reminded last night in our conversations with many of you about the struggles we experienced in the 80s and the 90s in sort of digging our way out of a recession by building a new airport and a convention center, and yes, passing Lodo, and doing something called redeveloping the Central Platte Valley. What was that? Nobody remembered what the Central Platte Valley was. But because of so many of you in this room, and many who are not here today, who understood that without entrepreneurship, without vision, without dedication and hard work, we cannot continue to build this city, this queen city of the plains. And because of that, we are where we are today in celebrating this extraordinary facility. As I reflect on the ups and downs of our history, the successes and failures, and by the way, with all due respect to the RTD board members, remember, I was in the legislature in 1978, so I'm dating myself, when the first RTD board, which was elected, had some PR problems. Some of you remember, right? And what happened? What happened with lack of transparency? What happened with a break of the trust with the citizens? The citizens revolted. And they were epitomized in a representative named Jack McCroskey, a dear friend of mine, who decided we ought not to have an appointed board, we ought to have an elected board, more accountable to the people. And so now we have an elected board of 15 members who continue to do the great work. And we've learned from that we have always been a community of self-reliance. And maybe it's because we're in the middle of the country. We're not on the East Coast, we don't have a seaport. Our airport is the only gateway to the world. We're kind of distant from Washington and some of the financial centers of the world, so we have to be self-reliant, and we always have been. We've been confident, we've been bold. We've been open and transparent with citizens, and perhaps that'll be discussed today. And we've invested and we've built for the future, always ensuring that when we make these decisions for the public, for citizens, for taxpayers, for consumers, that we always have found a way to make these extraordinary investments a win-win-win for all parties involved. Which brings us to our panel today. In reflecting on what they're going to talk about, let's remember a couple of things. Times have changed, as they have always changed in the history of our city. These changing times which have met each successive generation of leaders who have had to adjust. Don, we were talking about the challenging experiences you've got to adjust, right? And Phil, you're having to adjust with new changing times. And we've had to adjust because things have changed. It was President Eisenhower who had a vision of building the National Highway Transportation System, partly to ensure that we could move wartime material from one coast to the other in case we were ever invaded, but it was a federal responsibility. And then over time, it became a partnership with states to invest in infrastructure and transportation, not just in highways, but in transit and rail and even airports and other things like that. And I remember when I was in Washington, we passed a 6-year bill, a multi-$100 billion investment for the future. I recall ICE-T, the Intermodal Surface Transportation Act, which called for intermodalism, and here you are embodying the whole notion of intermodalism, which is to your credit. But for some reason, and here I'm going to be a little political, our Congress has not been able to pass a new transportation bill. The gas tax is down. The trust fund is down. And now I read that young people aren't driving anymore. They're using transit. They're using bicycles. They're living in the inner city. They're walking. They're using these interesting little cars around town, sharing them. Times have changed. And all of that means that the leaders of today have to adopt and adjust to these changing times and to move forward. So, in celebration of the great progress we've made for so many years, we have an extraordinary group of leaders this morning who are going to be introduced by our moderator. And it's my great pleasure to introduce him to hopefully get us to think more about how we continue to move our city forward. Michael Schneider is the Senior Vice President and Managing Director for HDR Infra Consult. I hope I pronounced that correctly. Close? What should I say more appropriately? Infra Consult, excuse me. And he's going to introduce our panelists. But he is co-founder and managing partner of Infra Consult, thank you, an international consultant who has provided advisory, development, and management services to public authorities and private organizations on helping develop and finance infrastructure projects, which is now part of HDR. Got that right. He is also a member of the board of directors and chairman of the Committee of Public-Private Partnerships of the American Public Transportation Association. That's an extraordinarily important position. Prior to forming his company, he was executive vice president and member of the board of Parsons Brinckerhoff. During his 30-year tenure With that firm, he founded and directed PB's strategic consulting practice. He has worked internationally on numerous transit, highway, and toll road projects, including the $20 billion P3 at Los Angeles Metropolitan Transportation Authority, the East Side Access Project in New York City, the E470 highway program here in Colorado. So clearly, he's got a wealth of information and extraordinary experience. Please welcome our moderator, Michael Schneider. Michael?
Well, thank you very much, Mr. Secretary, for your comments and your kind introduction. Our program today will be to operate very much as an informal panel, which is why I get to remain seated. It's not often that we're able to celebrate the great work, the planning, the engineering, the construction, the innovation that contribute to a creation of the magnitude of the new Denver Union Station. It's truly a tribute, really, to the collaboration of numerous government agencies and the private sector that we're all privileged to be here today for this occasion. Colorado is about successful partnerships between the public and private sector, and more so than ever in recent years. The state, the municipalities, the transportation agencies with us here today have set an example that many other regions can and probably should emulate. And as we know, there are countless obstacles and institutional barriers to creating the kinds of partnerships that result in the outcome we're celebrating today, and those that we will continue to celebrate as the Eagle P3 program, US 36, and many other projects in the state come online. Our panel sessions today will explore the backstories to these successes. We'll focus on the lessons learned and the future improvements and innovations that we can bring to the public-private partnership model. While P3s are by no means a panacea for all transportation projects, the selective and creative use of partnerships between the public and private sectors has been shown to lead clearly to project acceleration, to reduce life cycle costs, and the positive and beneficial economic impacts that result from bringing infrastructure to the public in an expedient manner. And yet, while the P3 model can be beneficial to financing and thereby to accelerating project delivery, it is no substitute for public funding for public projects. Too many still believe that public-private partnerships can substitute for, or worse, completely replace the long-standing role of federal, state, and local governmental programs that support infrastructure. In this panel, we'll explore that notion and others in our discussions, which become really all the more relevant in light of the current discussions going on throughout the country regarding the pending depletion of the Highway Trust Fund and the reauthorization of surface transportation legislation, which used to be an annual 6-year event, and now it seems to be a little bit more frequent than that. I'm going to introduce our panelists initially and ask each of them to provide a couple of opening comments, some insights from their perspectives respectively at the federal, state, and local levels. First, we're privileged to have with us Linda Gerke, who serves as the Federal Transit Administration's Regional Administrator for Region 8, providing executive direction to a multidisciplinary staff which delivers transportation programs to the states of Colorado, Montana, North Dakota, South Dakota, Utah, and Wyoming. During her career with the FTA, she has directed activities covering programs that included metropolitan statewide planning, environmental analysis and documentation, pre- and post-development grants management, and project development for major transit capital investments. Prior to coming here to Denver, Ms. Gerke worked at FTA's Region 10 office in Seattle as the Deputy Regional Administrator. She has also worked as a planner with the U.S. Department of Commerce, the Economic Development Administration, a planner with Hillsborough County, Florida, and as an aeronautical cartographer, which is a job I've always wanted, by the way, with the National Oceanic and Atmospheric Administration. She has extensive experience in grant management, environmental, tribal relations, economic development, and disaster response. Linda has over 17 years of transportation-related experience at the federal level and over 30 years altogether of public service. Ms. Gerke received her BA degree in geography from Western Washington University and a Master's of Public Administration from Seattle University. We're also privileged to have with us Don Hunt. As all of you know, Don serves as the Executive Director for the Colorado Department of Transportation. And as the Executive Director, Don is charged with leading the department in planning for and addressing Colorado's transportation needs. Don oversees 3,000 employees statewide and an annual budget of approximately $1.2 billion to guide CDOT in providing the best multimodal transportation systems for Colorado. Since his appointment by Governor John Hickenlooper in 2011, he has focused on bringing stronger business strategies to CDOT and has improved financial management, established an asset management system to protect the state's transportation facilities, and increased performance metrics for improved operation. CDOT's first public-private partnership, US 36, began this year. And finally, representing the local government, we have Phil Washington, General Manager and CEO of RTD. Phil became RTD's General Manager in December 2009, having served as Interim General Manager for 6 months, and prior to that was the AGM for administration for RTD for nearly 10 years. As General Manager, Phil and his team were leading really one of the most dynamic transit agencies in North America, implementing the Fast Tracks program, the largest voter-approved transit expansion program in the country. In a relatively short period of time, Phil has spearheaded the implementation of the first of its kind $2.2 billion transit public-private partnership. The Eagle P3 project is now 60% complete and on track to beat or meet the scheduled completion date of 2016. Earlier in his career, Phil was appointed by the Office of the Mayor of Denver as working co-chair for transportation for the 2008 Democratic National Convention. And in 2009, Phil was appointed by Governor Bill Ritter to serve on the state of Colorado's Workforce Development Council to help the state create a 21st century workforce. Phil's testified before the U.S. Congressional Transportation Subcommittee and has been awarded a White House Transportation Innovator Champion of Change Award. Now, prior to Phil's transportation experience, he had a storied 24-year active duty military career, retiring as a decorated U.S. Army soldier, having attained the rank of Command Sergeant Major. This position is not only the highest non-commissioned officer rank an enlisted person can achieve, but also requires uncompromising integrity and leadership skills. He's the recipient of numerous military awards, honors, and citations, and is additionally a member of the Transportation Research Board, Executive Committee, and the American Public Transit Association, where he serves as a vice chair and will be succeeding to chair of APTA later this year. In 2013, Phil was named as the Outstanding Public Transportation CEO by APTA. And finally, you should all know that Phil commutes to work by bus and light rail daily from his home in Aurora, Colorado. So let's move to our panel for some opening observations, first by Linda, then by Don, and finally Phil.
Thank you, Mike. I'm here representing the Federal Transit Administration, and Therese McMillan, our Deputy Administrator, really wanted to be out here, but she had an ongoing family emergency with her daughter in the hospital. So I'm here to stand in for Therese, and I have the fortune to be able to have a speechwriter help me out for this session. So Therese wanted me to mention that we know there's a constant demand on public funds and that sponsors need to take advantage and leverage all the tools that are out there for them. And at DOT, we really want to make P3s viable as an alternative, and that around the country, people will be coming to Denver to see how it's done. Additionally, there's a couple people in the audience, Charmaine Knighton and Dave Beckhouse, who have worked tirelessly for getting this Denver Union Station and the Eagle P3 project moving. And so if you want the knowledge base of the Federal Transit Administration side of it, and this is the only P3 that came out of the Penta-P pilot project, say that fast a few times, they're here in the audience. Can you guys at least just raise your hand so that they know who you are? They're even up front, so I pass it on. They've done a great job putting this together. And those are the comments that I had. Mike.
Tom?
Good morning. I think my first observation is that I've watched the development of this project. It really is over the last 2 decades, from the vision to the realization. And as Secretary Peña pointed out, we've had these kinds of challenges throughout our history in Denver and in Colorado to connect our citizens and connect our economy. And having watched this one for the last 20 years and then being a member of the Union Station Authority, it's pretty apparent that some of these projects could have just as easily not happened as happened. Whether it was the rail line to Cheyenne or DIA or this wonderful new Union Station facility, there are literally tens or hundreds of events that have to go right in order to get to where we are this morning. And there were times in this project where you weren't quite sure they were all going to go right. So it's a testimony to the kind of vision and determination that all the folks who have been around this project bring to success this morning. Now, just a bit on P3s. I think that DRTD, now along with CDOT, are helping to write a history of P3s in Colorado. Over the last couple of years, I think we've established Colorado as a leader in public-private partnerships, at least in the transportation sector. Our ability to do P3s was created by the legislature in 2009, and that legislation said that the new high-performance enterprise should aggressively pursue public-private partnerships. Well, we did just that, and in just 4 years, we closed the US 36 public-private partnership project. With the RTD, it provides that leg of fast tracks with bus rapid transit, a great intermodal project, but it also has express toll lanes that will allow us to price manage and make sure that the third lanes in each direction are flowing smoothly between Denver and Boulder. And even more, it allowed us to transfer the entire toll revenue risk to the private sector over the next 50 years. And Plenary Road Group, who is our concessionaire, brought $175 million of equity and debt in order to advance by years a project that would not have made it all the way to Boulder for some time. So I think we've learned a lot in a short time on P3s. I think we've learned that it's important that we keep P3s in the Colorado toolbox for transportation. We have a quiet crisis in transportation in Colorado going on right now. We've lost our funding from the General Assembly, from sales tax and income tax. And the high water mark of the gasoline tax in terms of receipts in Colorado was 2007. That's 7 years ago. So we have learned a little bit, but we're determined as ever to continue to use public-private partnerships as a way to help build Colorado's economy. But at the same time, we also have learned that when we go to alternative project delivery methods, there's an additional need for public involvement and transparency. We're committed to doing that as well. Phil?
Well, thank you for having me here, first of all. Want to thank everyone for coming. I want to start off with thanking the RTD team, the RTD staff. We have worked with CDOT, the Denver Union Station Project Authority, the City and County of Denver. This project and this edifice that we sit in right now is just a great testimony to the partnership of the entire region in bringing this together. And so Secretary Peña talked about last night. That was a great event. The energy in the room was fantastic because I think people realize this was a regional victory. This was a regional accomplishment. And you know, it shows that we can build these mega projects that span multiple administrations and even multiple agency leadership if we stick with it. And I think that's a wonderful thing. So I think we should all be very, very proud of this facility and what we're doing with regard to transforming a North American city and region through transportation infrastructure investment. I think it's huge. You don't often see or witness the transformation of a major city through transportation investment. We saw it 100 years ago in New York and Chicago. We're doing that here, and we should be proud of that. The P3s have been fantastic for us at RTD. I mean, the Eagle P3 project is the only P3 of its magnitude in this country today in transit, a $2.2 billion program, a program with multiple partners as well in terms of the private sector, a program that allowed for tremendous creativity by the private sector, a program where we did not get wrapped around the design specifications. Our emphasis was on performance. And so as long as the train gets from here to the airport in 35 minutes, I don't care how you do it, private sector, just get it done. If you, yeah. I think as public sector entities, we get too wrapped up in being too prescriptive in terms of the projects. We need to let the private sector be creative, and that is what we want to do. Denver Union Station, public-private partnership. The Eagle P3 project, Denver Union Station, we would not have been able to do these projects without the P3 mechanism. And so if we had been able to do them, they would have been years away. We would not have been able to do them as soon as we are doing them right now. So I think that this conversation on P3s is very relevant. I think the timing could not be better as we discuss and educate the whole region to include our elected officials. I was talking to a group yesterday morning, and I was talking about how public sector administrators, myself, Don, we are being forced to be innovators. We are reluctant geniuses. We are reluctant innovators. And the reason we are being forced to do that is the lack of funding that's coming out of Washington, and in some cases the state level. And so we are being very, very innovative in our approaches because nobody wants a tax increase, right? And so we're being innovative. What's left out, though, is the education and the educating of our elected officials and our governing bodies. When we bring these things forward, we don't do a good enough job of educating our governing bodies on what this is and what this means. And so therefore, I think there is a little bit of hesitation with regard to the packages that we bring forward because we haven't done a good enough job at that. We've got to get that right. We have to educate our elected officials and our governing bodies so they will not hesitate and back away from innovation or the new financing tool that's on the street today. So that's a big introduction, a long introduction, but I look forward to the questions.
It's your party, Phil. You can talk as long as you want.
Right, we're enthralled and we'll listen.
But let's move to the broader conversation. We'll discuss a few items here. I'd like to intersperse it, perhaps with a question or comment from the audience. Can everybody hear all of the panelists, by the way? In the back, raise your hand if you can hear. That's great. Obviously, this facility was not built as an auditorium, but as a bus concourse. And yet, I think the geniuses behind the AV systems here have managed to make a auditorium out of a bus hallway. So I think that's great. Now, clearly, listening to Linda, Don, and Phil, Colorado is leading the way in the U.S. today in the use of public-private partnerships for accelerating the delivery of public transportation projects. In a nutshell, what are the factors that you guys see that has allowed that to happen, where in so many other places it has not? Phil, do you want to respond first?
Sure. I think the region, and I think Secretary Peña talked about this in his comments, this region has been progressive and aggressive with regard to executing and implementing and building large infrastructure projects. If you look at the airport, you look at the Eagle P3 that we talked about, if we look at other even social infrastructure. So I think the progressive mindset of the region has been wonderful with regard to building out these projects. And I think that is a huge piece of why Colorado has been so successful. With that progression, with that aggressiveness that we've showed as a region, we've been really viewed, I think, in Washington, whether it's the Federal Transit Administration or the Department of Transportation, we have been viewed as sort of pioneers in this area. Our track record is great. We finish projects on time and on budget. This project is on time and on budget. West Quarter that we opened, the first rail line in the Fast Tracks program, 8 months ahead of schedule within budget. And so that track record, I think, also has something to do with it with regard to our pursuit of federal dollars and the private sector's willingness to partner with a public sector agency that has their act together, and the region that has their act together. And so I think for those reasons, Colorado has been successful in pushing out these projects.
Mike, could I add to that? I think at the state level, the reason that we're moving forward quickly on P3s is, I'm afraid, sheer terror. You know, we know the legislature knew in 2009 that by that time Tabor had been around for quite a long time, and it's very, very difficult to get any kind of tax increase through a vote of the entire state. And by that time as well, you could see the impact of higher mileage vehicles and alternative fuel vehicles on gasoline tax receipts. So it's another way, another tool to bring equity and innovation to the delivery of transportation systems. And I think the other reason we've been successful in Colorado, as Phil said, is we have a strong ethic, a strong culture of partnership and collaboration. As Governor Hickenlooper says, collaboration is the new competition. He really does believe that, and we do a great job in collaborating among the many public agencies, local government agencies to deliver transportation, and now no fear in collaborating with the private sector to bring innovation and cost effectiveness to project delivery.
And I think, at least on the federal side, when you look at what you've done with the T-Rex project, that kind of opened up the water, or the flow of water, to be able to say you can do very innovative things in Colorado. And so by having a staff in the regional office that's willing to push the envelope at headquarters and say, wait a minute, we can do it, we can make these agreements, we can change the gray to black and white or the black and white to gray just so we can get to the end product. And I think that the creative thinking of the staff in the region and in headquarters was very beneficial to making it be accomplished.
I think your region must be the common denominator, because Utah's done some really innovative partnership activities, as of course as Colorado, while the larger, more coastal states are having a bit more difficulty. So obviously FTA here is the common denominator. Congratulations.
Thank you. My staff, they're all here. All 13 of them are out in the audience. I hope.
In many states,
You hope. Well, your email responded that FTA region is closed today because everybody is at the grand opening of the Union Station.
Folks, in many states, creating cooperative agreements between local transportation authorities and state DOTs has been difficult, to say the least. In fact, in California, a proposed P3 project on the state highway system was shelved partially owing to the inability of the state and the transit authority to come to a cooperative agreement on funding and oversight. What do you think are the factors? What can you tell our audience that contributed to the ability of RTD and CDOT working closely together? I think it's a model that we need to see in more places. Don?
Well, I think the turning point for CDOT and RTD was clearly T-Rex. The governor, Governor Owens, said we're going to go get this done. We're going to get I-25 with another lane, and at the same time, Phil was able to put together the funding with the help of FTA on the South I-25 line. It brought our staffs together in a way that no other project could have, and it's those personal relationships, I think, throughout our organizations. We learned a lot from each other, and we believe in each other's programs, and that's just carried on to several other projects, including US 36 and 225.
Yeah. Well, I think the reason we've been so successful is because I like Don Hunt. Yeah, he's pretty cool. No, I think I would go back to the T-Rex project, as Don said. I mean, you know, I don't understand why the state and a transit agency cannot collaborate. See, I don't get that. And, you know, and we don't do that in Colorado. It happens in other states. I don't understand that because the leadership should demand collaboration. The leadership of the various agencies, the governor, whoever in these various states should demand collaborate. That is leadership. Leadership is teamwork. And so we've been able to do that. We meet very frequently. We talk about projects. We want to sit down and think post fast tracks. We want to sit down and think about how we can do, whether it's bus rapid transit statewide, which is CDOT is looking at that right now, or a statewide rail plan. We want to do more. It's not enough for us to build Denver Union Station. It's not enough for us to build the Eagle Project and a line to the airport. It's not enough for us to build transit-oriented communities around our stops. We need to do more. There needs to be even more collaboration with our agencies. And we also, as we are doing, bring in the private sector to help us figure all of this out.
Now, there's been some modest controversy over the US 36 project. Is that an understatement? In a nutshell, what contributed to those issues and the pending legislation, in fact, and what lessons have been learned? What advice can you give to others?
Is that a question for Linda?
Yes.
Well, to say the least, I mean, CDOT thought we had about the perfect project on US 36 when you combine bus rapid transit and congestion pricing and 20-mile long bicycle trail following the whole facility for bicycle commuting. You think you've pretty well hit the pinnacle of intermodalism, and it was so written up in the New York Times. However, here's the lesson learned. I think when you're going to a different project delivery method like P3 and a different financing and long-term operations and maintenance contract, which in the case of US 36, in order to minimize public investment, public funds, we went to 50 years in order to get that toll revenue risk fully transferred to the private sector. When you're talking about a highway, that's a different deal for Colorado residents. And I think that although there were years of an environmental impact statement, there were years of discussion of express toll lanes, there was really in the general public and town meetings very little discussion of a 50-year operating agreement to the private sector. That was very different for the folks in that corridor to try to comprehend, even though I will point out that Eagle P3 was done in a very similar way a couple of years before CDOT did US 36 in terms of a private operations transfer. So we are totally committed. You know, it's another segment of the project that's going to take more town meetings. And Senate Bill 197, which passed the Senate and last week the House, calls for a great deal of transparency. We support that 100% at CDOT. However, I think it's also my obligation to say that what was billed as a transparency effort also contains constraining elements for future P3s for the Colorado Department of Transportation. One of them is the duration or term of a potential private contract, which would be limited to 35 years unless it would be approved by the full legislature. That puts us in a very difficult position if we go out to the private sector, talk about a P3, think we can do it in 35 years, the industry comes back and says, gee, we could accomplish a lot more with a 40 or 50-year concession. Here are the benefits to Colorado, and all of a sudden we would have to go on hold for a year and take that provision through the Senate and the House and the state legislature. So without a doubt, this is a big concern right now in the governor's office. We had a lot of testimony, not only from industry, but also local government, urging the legislature not to include those contract provisions that would require legislative approval, but they are in the bill as passed by both houses. We'll have to see how this works its way through in the next 2 weeks.
Thank you, Don.
Guys, T21 and subsequent federal surface transportation bills included a provision called PEN to P, Public-Private Partnership Pilot Program.
I don't know whether the next one will be HEC to P.
But PEN to P promised various levels of support for transit projects
where there was private financing,
included, primarily the acceleration or streamlining of some of the
provisions that existed in New Starts and other FTA
sorts of programs.
Initially, Houston and Oakland, in addition to Denver, were taking advantage of that opportunity. Subsequently, only the Eagle P3 project took advantage of Eagle P3. As we approach reauthorization once again, what types of provisions should we include, would you recommend that we include in the new bill that create a more conducive environment for private sector involvement in transportation projects? Linda, you may want to give an overarching comment, and then I'd like Phil and Don's input.
Sure. One of the things that really helped with the Denver project was that we were able to accelerate our reviews for project deliverables, and also looking at how we streamline risk assessment. So although I can't speak to what you would put in reauthorization, there's a lot of key factors for the planning stage, the development phase, and understanding the risk that could be construed to make it work a lot better. So, you know, we've talked a lot about visionary leadership. We've talked about revenue potential for the private sector partners. We've talked about risk allocation between the partners. I know one of the things that we've had a hard time with in the TIFIA program, at least that's associated with the P3, is understanding earned value versus direct value when you're looking at your charges and how we can accept it. So there are some ways that FTA, even if we don't see it in some kind of authorization, could be able to go back and look at our guidance and say, you know what, we need to make this a lot simpler so it's more friendly for the operators or the entities that need to use it. And that's one of, I think, the key pieces that we could do no matter what passes in authorization or not passes.
Phil, you provided some testimony to the Ad hoc Committee on Public-Private Partnerships. Yes. What did you tell them that was really good?
Well, everything was good. I think increased TIFIA capability, so increasing the TIFIA program The TIFIA program is a great program. I mean, it's one of those loans that you wish you had for your house. I mean, this loan, you can miss payments.
You don't have to start paying back till your kids are in college.
Exactly.
Delayed payments.
You don't have to start paying back, interest until you take down the first draw. This is a great program. We need increased TIFIA capability in the Grow America bill. And I think that is in that bill right now. We also need we need to raise the cap on private activity bonds. Private activity bonds, we did private activity bonds on our EAGLE program. Private activity bonds where the public sector entity is the issuer and the private sector pays back those private activity bonds. This is a great program that can be used on mega projects. Linda talked about the streamlining. The Penta-P program, which we are the lone agency yet in that program, was a great program. The main benefit, as Linda said, was streamlining the new starts process. And I have to say, we did keep reminding DOT that this was a streamlined program as we worked our way through this. I remember Representative Oberstar, who just passed away, saying that it takes 14 years from the time the project is conceived to revenue service. That's ridiculous, and it's too long in our process to do projects. And so it was wonderful in this Penta-P program, working with DOT and FTA, to go from what we call concept to contract on the Eagle P3 in 3 years. That's fantastic. And that is the way I think we should build these mega infrastructure projects in this country. And so we have encouraged Congress to do more of these kinds of programs, to make this the norm, actually, because the Penta-P program was a pilot program. It was a pilot program. This should be the norm in this country, to expedite the various processes, to look at the risk assessment, also to understand that when you do P3s, the private sector, they are doing their analysis as well. So why should the federal government do that same analysis? And so that is what we're pushing forward, that if the private sector is willing to put their equity, in the case of the Eagle P3, including the private activity bonds, some $585 million, and they have done an extensive amount of due diligence with regard to risk assessments and analysis and all of that, then we should take that, and DOT and FTA shouldn't have to do that same analysis. And so that's what we're pushing. We're trying to save the FTA money.
Well, as I look out at this football field here, does anybody either at the near goal or the far goal have any questions that they would like to pose? I think I'm told we have a roving microphone. And raise your hand or stand on your chair if you have a question. Well, if not, I have a few more.
There's a.
Oh, do we have one? Yes, please, sir. I think the microphone is on its way.
Say thank you so much for all your work and your investment. And I think specifically my question is directed towards Phil. Phil, I live and I represent an area up by Highway 36, in which we heard a lot about, from the public, who did not feel like they were properly informed, educated, or involved in the P3 project. And I know you had said earlier that you felt what was left out was the education of electeds and governing bodies, so that we don't back away from innovation. And I'm wondering, Phil, if you could talk a little bit about how you see the need to be able to involve the general public, the people that ride their cars on those highways every day, in these processes.
Sure. Thank you for the question. Yes, I think there's a great need to educate both the governing bodies and the general public. With regard to the general public, I mean, you have your National Environmental Policy Act, or NEPA processes. You have your EIS requirements that call for public meetings, public comment periods, all of those kinds of things. And all of those things are done on any federal project. Now, how do we educate, inform the general public that does not show up for those meetings and don't read a lot of stuff? I think we have to utilize social media. We have to utilize social media to explain what this process is. And then we have to lay out the options that if we don't go this route, this is what we have to do. I mentioned earlier, nobody wants to see taxes raised. Well, guess what? If you don't want to see taxes raised, then we have to be innovative, and P3s, though not for every project, is the innovation that we've brought forward. So I think, to answer your question, we have to figure out, we have to better utilize social media, and maybe that is a public-private partnership with Google and Facebook. I don't know. But we have to do a better job at this to get the general public to understand, because I do think that there is a knowledge deficit there with the public sector and our governing officials.
Don, I want to ask you a question. Colorado's taken some unusual and positive steps toward improving project delivery, including the creation of the high-performance transportation enterprise. Can you tell us just a little bit about some of the thinking behind the state's actions and how you see these actions contributing to accelerated project delivery?
So we've taken a number of different steps. It started with the legislature in 2009 creating the enterprise. Again, because of Tabor, we need the ability to have borrow money through an enterprise. CDOT can't directly borrow money because of Tabor without going to the voters. If it's an enterprise activity where the funding is more prescribed and more internal to that enterprise, it gives us more flexibility. And then we've combined the high performance enterprise with a new Office of Major Projects. We want to take all of our projects that are over $100 million, get them up to the higher level of CDOT immediately, look at cost effectiveness in terms of the design and cost effectiveness in terms of project delivery as well. And I think by putting more early examination, scrutiny, peer review on our projects, both through the enterprise and our Office of Major Project Delivery, we hope just frankly to do more projects, to save money and get more projects out on the street. You know, I'll also comment one thing on P3s, and this often is a difficulty with elected officials. There is a difference between funding and financing. And although funding can be part of a P3, private sector equity, it is more likely in the future to be a financing technique that brings financing benefits as well as long-term O&M benefits. It does not replace the need for basic funding. So as Congress talks about the future of P3s, and I hope, Phil, you're the one to the Transportation Infrastructure Committee back there, we still do need some funding, and we are in a pretty difficult strait. I want to talk to Secretary Foxx a little later today. I got my greetings letter this week that says, greetings, this is the Secretary of Transportation. We're going to slow down your federal payments starting in August. So if Congress doesn't do something, it will have an impact on our project delivery.
Well, it's too bad we only have 3 more minutes left for our panel.
because that topic is so germane to everything we're dealing with at this point. And there are so many agencies around the country that confuse the fact that public-private partnerships leverage funding, either user fee funding from tolls and fares or public funding from other sources, and think that the two are interchangeable. So I appreciate you pointing that out. Are there any other questions from the audience? Okay, right here in blue shirt. Microphone to your left.
What are the chances of using P3 project in the redo of I-70 through the trench?
I guess that might be for Don.
Yes, it is. So we've been at that one for 10 years. We have a viaduct that it's the worst piece of infrastructure on the state highway system. We did come up with a concept of, it's called partially covered and lowered. We think it really helps reunite the neighborhood, and right now we're in a place where we're looking at either design build or P3 delivery. And again, what we face right now is trying to understand what's in front of us in terms of the new legislation, and also in that particular case, even though we'll have express toll lanes, there's probably not enough revenue because it's such a short segment to really finance the project. So it's going to be more of a Eagle P3 kind of deal if we go that way, which is all about long-term performance, operations, and maintenance, a performance-based project if we go to P3.
Right, there was one last question, I believe, from the audience.
My name is Paul Solano. I'm one of the RTD directors. And I think P3s are a good concept, but I talked to a lot of people on it, and I think of with the whole concept with cautious optimism. And to me, a lot of the concerns I've been hearing is sometimes public-private partnerships can be a transitional step towards total privatization. And the concept of corporatization is a reorganizing activity now performed by some political agencies so that inherent economic realities become more understandable and transparent, which I think is good. But the lack of innovation and no institution in the private world can allow itself to stagnate. And this creates creative forces of destruction. And a lot of people think that if things go wrong with the public-private partnerships, that the problems will be turned to the taxpayer for bailouts. I mean, what is your view on that? And I am for P3s.
Well, I'll take a shot at that. I think the structuring of the deal, the structuring of the concessionaire agreement, in our case for the Eagle P3, is very, very important. Where you have the public sector entity owning the asset at all times. Where you have an availability payment model that has penalties and incentives, and the penalties being much greater than the incentives. And so there is a real benefit for the private sector to do well in our particular concessionaire agreement. This is how these should be written up. And I'll just give you a quick example. And you know, my private sector partner is here, and he'll probably cringe when I say this, but we had some bridges out there. These bridges didn't meet the specifications. Now, in a normal design build kind of framework, I gotta think that some design build firms would have tried to hand me the keys to that bridge and that project and walk away. But since we have a 28-year operations and maintenance provision or requirement, it's to the benefit and to the private sector, knowing that they would be penalized if that system closed down. It was to their great benefit to repair that bridge, up front. And so it's all how you write up the concessionaire agreement, and it's all how you write up the deal structure, if you will, to protect the public. RTD has the ridership risk. RTD has the fair revenue risk. This is all about risk allocation when you do P3s. Who takes on what risk? Who's better to take on that risk? And if there is a risk that the private sector has to take on, guess what? They're going to charge you for that risk. And so it's all how you structure the deal to protect the public. And I think here in Colorado, we've done a very good job of doing that, both on US 36, in this building, this edifice right here, which is a massive P3, and also the Eagle P3 project.
Well, thank you very much. I think our time is running short.
Hey, Mike, could I make one quick
absolutely.
plug? I hope I can get people to come back when we initiate statewide bus service, the bus staying, and bring our interregional buses into this facility next year.
Absolutely.
Well, with that, let me ask our panelists if they have a final closing comment, and we'll bring our session to a close. Linda?
I would like to just make sure I mention that the Federal Highway Administration and the Federal Railroad Administration were also key for these projects and working in cooperation. And it's also helped our office with FTA work closely with another DOT mode, and then that's worked its way down through the Colorado DOT into the transit agency. And again, without those other sources of funding, that's how we help build big projects like this.
If you haven't thanked Michael Shirotis with CDOT, who has helped develop the P3 market in the state of Colorado, he's done a tremendous service, and what I'll just term as a senior part of his career, he is to be thanked. Mike, thank you, sir.
I'll just say that this is a great and timely discussion. I think P3s are the future in some projects, not for all of them. As Don said, it's financing, not so much as funding. We still like grants, and those are nice. But I do believe when you look at the projects that we have here that are P3s, the Eagle project saved $300 million, primarily due to alternate technical concepts, or ATCs, that we allowed the private sector to bring in as ideas. We own those ideas, and we are implementing those alternate technical concepts on the project today. That helped us save $300 million. We would not have done US 36, the Eagle P3 project, or this facility right here without P3 tools.
So on that note, please join me in thanking our panelists for excellent conversation. And let's keep the conversation going.
I want to thank the prior panel. That was the public side of the P3 equation. Today, this session, we have the second P with the private sector side of it. And I just want to say I'm Bill Mosier, and I run Trammell Crow here in Colorado, and we served as owner's representative to the Denver Union Station Project Authority. Congratulations to everyone that's here, but a special congratulations to all the folks who have served on that project authority over the years. I see Elber Wedgeworth, our chair, sitting up here. I know Jerry Glick, vice chair, is here, and particularly the private sector members who volunteered their time to the authority and gave it such great guidance. Part of that private sector participation, we really appreciate that. This is obviously a special day for all of us. Most of us who are involved in this project, and Joe, I'm going to tell you from now on, we don't have to just say we built a bus concourse. We built a event center, and we built an auditorium. This is a multi-purpose facility, so we're going to have to ask RTD if they can close this periodically for community events. But this is really a celebration of collaboration. The remarks that Mayor Peña mentioned, Secretary Peña mentioned at the very beginning of this are really apropos, and he deserves a great deal of credit along with Mayor Webb, Mayor Hickenlooper, and Mayor Hancock and all these multiple administrations. But this really has been a 25-year journey for this community, and these kind of projects do not just happen. They take great vision, great persistence, and great collaboration. We're obviously having to find new ways, as you heard, of doing business and getting our infrastructure rebuilt and built. And we are here today because there's really no better example in the United States than Denver Union Station right now. We've heard from the public side, and now we're going to hear from the private side, as I mentioned, the second P. Obviously, any project has to make economic sense, and every project has to have the dollars balance. But this is really not all about the dollars, as we've certainly learned with this project. It's about transparency, it's about accountability, it's about inclusiveness. There's lots of public money that goes into these projects, and while there's also private money and private investment and private risk, there's a great amount of public stewardship and public trust that's at stake. And so there's a real commitment in P3s to a public stewardship and honoring that public trust that I think has permeated this project and needs to permeate every one of these projects that happens. The exciting thing about this project is the merger of transportation and land use. This bus facility really is being financed by the City and County of Denver through a tax increment process that captures private investment tax dollars, whether a property tax or sales tax, to pay for this facility. And then, of course, sales tax pays for the train facility. So that merger of the private sector and the public sector to make this project happen is extremely unique and is really the hallmark of this project. And so with that, we have a great panel led by a dynamic lady, Alethea Nancoon, with Patton Boggs out of Washington, D.C., and she's put together a great panel of some of the private sector folks that participate in these P3s. Alethea is very experienced in public and private debt financing, with particular emphasis on public infrastructure, airports, surface transportation, mixed-use multifamily, and water and sewer utility projects. So I think she'll bring a great perspective to how we finance these projects in the United States going forward. She's advised many national and regional investment banking institutions on project finance. She's served as bond counsel, disclosure counsel, and underwriting counsel on a wide variety of the projects that I mentioned. So with that, I'd like you to please welcome Alethea Nancoon as your moderator. Alethea?
Thank you very much. I think I speak on behalf of all of our fine and esteemed panelists here that, to Bill's point, this is truly a collaborative effort between the public and private sector. And it is my pleasure to provide within the next 45 minutes, as my timer has begun, to just talk about, from a private sector perspective, what are some prime P3 projects, potential P3 projects, hurdles that have been surpassed, and just takeaways of lessons learned. We do think that this should be very collaborative, so we will provide time for Q&A at the end, but if there's something that resonates to you during the course of our discussion, please do stop and interrupt and ask questions. Just very briefly, I would like to introduce you, if you don't already know, our fine panelists. To my right is Greg Amparano. He's with FLUOR Corporation. He has 29 years of experience with FLUOR, holding a wide range of positions in engineering, project management, and executive management sector roles at FLUOR. He's the Vice President of Operations for FLUOR's infrastructure business line, where he's responsible for transportation, transit projects, and represents FLUOR on a host of P3 projects throughout the United States. He also served as the General Manager of Denver Transit Holding and as the Executive Project Director for Denver Transit Partners. And then to his right is Joe Wingerger, and he is with Kiewit Development Company. Joe's the Vice President for Kiewit, focusing on growing opportunities in the U.S. and in particular in the P3 transportation sector. Joe brings nearly 30 years of industry experience and leads the interface on behalf of Kiewit's investment initiatives to support the optimization of project development strategies, design, build permits, and long-term asset management analysis. Joe has supported the pursuit also of major transportation P3 and design build projects with a combined value of more than $25 billion across the United States and Canada. To his right is Dale Bonner. Dale is with Plenary Group. Prior to joining, as chairman of the U.S. operations, Dale Bonner leads Plenary's marketing strategy, business development, and operations across the United States. From 2007 to 2011, he served as California's Secretary of Business, Transportation, and Housing. And in that role as secretary, he oversaw the California Department of Transportation and represented the state of California in domestic and international affairs involving infrastructure, business regulation, and foreign investment. He's chair of the California Infrastructure and Economic Development Bank and the Public Infrastructure Advisory Commission, and served on numerous other roles in infrastructure boards and commissions. To Dale's right is Chris Elmore. Chris is with Goldman Sachs and a local Coloradian. Chris joined Goldman Sachs Public Sector and Infrastructure Banking Group in 2008. Chris's primary focus is on project finance and P3 transactions, and he's worked extensively on P3 and advisory transactions for a host of public entities, including, but not all, Chicago Transit Authority, Denver RTD, Eagle P3 project, the Seagirt Marine Terminal in Maryland, Port of Oakland Outer Harbor Terminal, and New York MTA and Triborough Bridge and Tunnel Authority, amongst others. And then to his right, and our final panelist for this morning, is Sam Barrand. She serves as the Senior Vice President Development Director for AECOM Capital. She has worked on several public-private partnerships in providing project bidding consortiums, including the Justice Complexes in Puerto Rico, Houston, and Indianapolis, and the development of the light rail for the city of Virginia Beach. Sam has also led the Performance-Based Building Coalition, a national group comprised of more than 60 infrastructure funds, contractors, engineering, architect firms, law firms, banks, and unions, governors, as well as mayors, to urge Congress to take more of a formalized, uniform action to provide more of a catalyst for the use of public-private partnerships for public buildings in the United States. So with that said, with my introduction of our panelists, I wanted to talk a little bit about, from their perspective, the current state of affairs for the U.S. P3 market, and in particular, their perspectives are going to be speaking from an investment perspective, an engineering perspective, program management perspective, as well as financial advisory and financial arranging perspectives, where to find the money for projects. And with that, I will turn it over to Greg to just start from, Greg, where is the US P3 market today in comparison to our neighboring countries across the world?
Well, thank you. Thank you for that nice introduction. Well, first, for more than 100 years, the FLUOR Corporation has partnered with its clients to provide some of the world's most challenging public infrastructure projects. With offices on 6 continents and more than 41,000 employees around the world, we're headquartered in Irving, Texas. We ranked 110 on Fortune's 500 list in 2013 with revenues in excess of $27 billion. Now, as a contractor, we take stake in P3 projects, an equity stake, where it will facilitate us securing the work. So to your question, these projects are complex. Since 1989, there have only been 18 projects in the United States that have reached financial close. So these are complicated arrangements. Let me give some insights from a project management perspective. P3s require a different mindset than more conventional project delivery methods. And really, early recognition of the owner-concessionaire relationship is essential. P3s are a long-term relationship, so the compatibility of the respective teams is very, very important. And that's key to success. And I think a big part of that is P3s tend to draw proposers from a broader area, and it is quite rare for the owner to have more than one P3. So in many ways, the relationships are new. So you attract a broader group, and relationships are new. The concessionaire and the owner cannot succeed without the cooperation of each other. So the theme that I'm putting forward here is relationship, and really how uniquely important that is to P3s. A couple of other observations. My experience is that project value is enhanced when there is early communication between all disciplines. Planning, design, construction, O&M, financial, public and private. This will allow the public sector to accommodate more in terms of the alternate technical concepts that the prior panel addressed, with the assurance that life cycle considerations have been addressed, because the private sector has skin in the game, let's say, for the life of the concession. So I see that as a major advantage, and a few other benefits. The record for P3s has been good. They have been delivered to the contracted timetable and price more often than other delivery methods. Something else that's rather unique, the obligation to live with long-term performance of the infrastructure really makes sustainability an integral part of design. And the Eagle P3 project is a perfect example of that. So not only is it an aspirational goal, but we have to live with it, so sustainability takes a much higher priority. P3 commitment really fosters community engagement, right? We have a whole bunch of stakeholders that we have to address and really live with through the life of the concession, so it takes a much higher level of commitment. This also translates to the ability to be more flexible in terms of local jobs, engagement in workforce initiatives, and building contractor capacity. You have a long-term relationship with the community. And really the last comment I'll make is that with the concession period, careers can be made on P3 projects. Typically in our industry, the average assignment duration is 2 years or less. With the duration of these P3 projects, you have people that are assigned here for multiple years. In our industry, we have to go where the work is. So what you have on a P3 is a unique opportunity for career development in a stable environment that is in one place. So you have an opportunity to grow careers on a single project assignment. So those are my initial remarks. Thank you.
Thank you.
Well, thanks. Thank you for inviting me to be part of this august group here. I'm really quite humbled, but when I look out into the audience, I see so many old friends and familiar faces that it's quite a pleasure to be here. I was talking to Mark Falcone last night, and we were talking about 6, 7, 8 years ago, and we were sitting upstairs, and many of the folks in the room were present on multiple meetings, and we were visiting about how we could deliver this project with the constraints of budgets and all the expectations and the needs and facilitate all of that. And I'd be less than honest with you if I didn't say there was more than once when, as a group, we would sit down and tensions would run high, and the books would close, and we'd all walk out and say, all right, we're done. But then we would get back together the next day and work it out. And many of my colleagues at Kiewit and many of the folks at RTD and all the business people in the city and county of Denver and the state, this is an example what that collaboration, that diligence, and that persistence can deliver. And it really, you know, we've heard a lot in the first panel about the partnership that needs to take place. And at Kiewit, much like FLUOR, we've been around for 130 years, so we've got a few years on our good friends and competitors. And here in Colorado for 80 years, since the Fort Carson, original build out of Fort Carson, which we were quite proud to be involved with, and a number of other profile projects that I won't go into. But we really look for three simple things, and we kind of boil it down so we can focus on delivery. We look for good projects with good owners and good partners. And I'm really pleased to say that in the case of this facility here, we hit it a home run, and we had great project with a great owner and a host of owners and great partners across the board. And that's really the success that you're seeing here today. But more globally, I mean, I'm pleased to say, and maybe steal a little Dale's thunder, as an investor at Kiewit that really wants to work with our traditional public sector partners and bet on ourselves, invest our own money, that tells them that not only are we going to help deliver as we have for decades, but we're going to put our own money to work to help deliver specific projects. And Dale and I, Kiewit and Plenary and some other partners just today reached financial close on another transit project in Canada, in Ontario, the Waterloo project. So it's just indicative throughout the North America and the U.S., and Colorado's right in the forefront. And I can tell you that very strongly as we work throughout North America. People want to know about Colorado, want to know about this project, want to know about the Eagle project, want to know about US 36, want to know about I-70, and how and what's that special spirit that's here in Colorado that helps move these things along. And you know, I just tell them, you got to be there to know it, and you got to feel it, you got to breathe the thin air, and then you'll get it. So I'll just leave it at that. We got a lot of other comments, and I'll pass it on here.
Dale?
Thank you. Yeah, thank you. I think, so you would start asking us to comment also on just where the P3 market is and where things are in the U.S. And I think I would start out first in emphasizing when you think about, you know, P3, public-private partnership, what it is, because oftentimes you hear people in the U.S. say we've been doing P3s or public-private partnerships for 20 or 30 years, and there's some truth to that if you're thinking about the traditional arrangement where a public agency has some land or some real estate or something they're trying to develop, and they get a private partner and they do some sort of arrangement, long-term arrangement to develop or master plan a facility, and that's a public-private partnership. The kind of public-private partnership that Plenary specializes in, and that a lot of the conversation is about with the fast tracks and US 36 and some of the other projects, that's a international concessions model, P3. That means that the government is getting a private partner to design, build, finance, operate, and maintain a facility over a long period of time. And so the distinction, when even here, I mean, I was marveling at the beauty of this facility. I was stopped in the men's room, and I thought this was the cleanest transit public men's room I've ever been in. You know, no one had been in there to scratch the mirrors up yet. Hopefully, none of you will do that before you leave. But you know, then I as beautiful as the place is, and I stopped and I was asking myself, what is this place going to look like in 10, 15, or 20 years from now? You know, will it be as pristine and as beautiful as it is today, or will it be showing the signs of deferred maintenance? You know, the facilities will be a little bit, you know, less aesthetic. You know, the lights will be, you know, kind of shimmering and so on and so forth. And that's the key difference, is that you heard a lot of conversation today about the 20 years or so. You know, every project like this is the product of sometimes 20 years of effort just to raise the money to build it, and that's probably what you have, at least with this facility, is that 20 years of effort has been to cobble together those 11 funding sources and the resources needed to get this thing standing. And I would venture to guess that there probably isn't much of a game plan as of yet as to say how is it going to be operated and maintained at the level, the high quality that you have here today. And that's the way that historically we've done business in America. But the international concession model is about what's called life cycle delivery, which means you're starting from the inception and you're building a game plan. You're trying to, from the time you design it and do the construction, everybody is working to bring down the overall cost of the facility, the overall cost of owning and operating the facility. So there's a lot of research growing now that shows that on average, particularly with a vertical structure like this, the cost of building it, I don't know how much exactly this facility costs, but that's about 8.5% of the long-term cost of owning it. So when you think about what it really will cost this region to have this asset here for 50, 75 years, the construction cost is less than 10% of that cost. So the international model, is focused on how to work with public agencies in addressing the life cycle delivery of these key assets. And that market is evolving very nicely. And as you heard today, I think the point's been made accurately that Colorado, I don't know how this happened, but kind of came out of nowhere. I mean, the last 8 or 10 years as people have been going around the country trying to get the legal authority and trying to talk with governments about how to do it. And I don't know that Colorado was on the map from that standpoint in terms of anyone thinking that the state of Colorado would end up being a strong leader in taking this model, trying to Americanize it, if you will, and moving forward. But that's exactly what's happened. And so for those of us in the investment community, it's exactly what you look for is public authorities that are investing the time and the effort in understanding what the model is, and then also how to use it. And I think with the two key projects here, the fast tracks and now the US 36, Colorado is showing that it's on the forefront of that effort. And now we have to also work together. You heard Phil Washington commenting, I think appropriately this morning, about the need to still do more work to help all the public decision makers and others understand also the implication of using it and how these things work, so that everyone can take that long-term planning perspective. And if we do that, I think we'll achieve at least the two things that the investment community looks for in these projects is predictability and efficiency. Because we spend sometimes many millions of dollars just before you even win a project. You spend millions of dollars positioning for an opportunity to bid a project, and then millions of dollars actually putting a bid together and paying for all the design and those things. And the early history in the U.S. was to see a lot of firms that would make those investments only to see a project canceled because somebody came to the table late, didn't really know what it was about, and they didn't like it, and so someone pulled the plug. Or you had a lot of changes at the last minute that made them unsuccessful. And so the fact that Colorado's been able to run, now at least two very efficient processes doesn't mean there's not going to be warts and things that'll come up along the way. But it's proven capable of running, very efficient and predictable processes. And I think that's going to continue to attract the attention of Plenary and others who will want to do business here. And lastly, I just say that it's important that because people like me, of course, I spent many years on the public sector side as well, as you heard in the introduction. But the history here has been that the private sector has been making the circuit the last several years, trying to convince the public agencies to do these kind of transactions. And it's one thing for the self-interested private investor to try to make the case as to how it's done and how it should be done. But the importance of having the public agencies now get their own track record of experience is that the other states and regions that are looking to do these things, they're going to learn from RTD and from CDOT and HPTE and others, their other public agency counterparts who've actually now taken those first couple laps around the track. So all those pieces, I think, make for a very exciting future here in Colorado and in other states around the country.
Chris?
Great. Thanks, Dale. First off, I think I kind of wanted to note and thank the entrepreneurial spirit kind of for all the public sector folks here in the room and across Colorado that's made it such a fertile ground for P3s. Personally, it's great to have an excuse to come back from New York with a lot of frequency because you guys are doing so many exciting projects, so I can't complain about that. But it's also very exciting to see people who are really thinking about these projects in a very innovative way and driving them forward. To start with the first question of kind of where have we seen the market in the U.S. developing, where is it going versus a lot of the rest of the world, It's been interesting that if you go back, we'll say about 10 years ago to the P3 market here in the US, it was very much of a asset monetization market. So let's extract as much value as we can from our toll roads, get some private sector capital and private sector operations in there, and we'll be able to raise some proceeds to go out and do some new projects. And you might kind of call that P3 phase one. And what we're seeing now, and we've even seen that in Colorado. So you had the Northwest Parkway transaction as kind of one of the first style of these asset monetizations. Then you start seeing this next wave of let's think about how we can really integrate the upfront construction, the long ongoing life cycle that Dale was talking about, and be able to deliver and accelerate interesting projects like the Eagle P3 US 36 transaction. We're starting to see more and more of those cropping up across the country. And I think we're in a phase now where we're starting to get a somewhat robust market, and we'll kind of call that P3 phase 2, which has primarily so far really been focused in the transportation space. And now we have a large number of public agencies that have said, hey, this is a pretty good delivery model. This works. The sky doesn't fall when we be able to get the benefit of public innovation and private innovation together. Let's think about how we can apply this in more and more nuanced and more innovative ways. And we're seeing more and more of those projects. And Sam will probably talk a little bit about how we're seeing that expand into the social infrastructure space, which will probably be kind of the last big development that we'll see in the US to bring us on par with what we're seeing in a lot of the rest of the world, particularly with our Canadian brothers to the north. As Dale and Joe were mentioning, there are a lot of projects that are getting closed there much more frequently than what we're seeing in the US. From our perspective at Goldman, depending on the transaction, we'll sometimes work as an advisor, sometimes as a direct investor, and as other times we'll be helping to arrange financing. And as we're looking at deals to say, where do we want to spend our time? Where do we think projects are going to be moving forward? I think there are really three things that we'll look at. And the first one is an availability and identification of funding sources. And as I think the first panel mentioned, P3s don't necessarily solve the funding problem, but they help it along the way. And so to the extent the private and public sponsors have said, we've identified user fees, we've identified tax revenue, we've identified federal grants that will be available to build this project, that's very, very important. Going out and saying, we'd love to build it and we have no money is a little hard. We can't necessarily solve that problem, but we'd love to build it. We have a couple of different sources we're looking at is where we can really come in and help figure out a way to cobble that together to be able to deliver these sorts of projects. I think the second piece is that the planning has moved along, and as Dale was mentioning, that you have public support and that people have gone out and thought about, have you started your environmental process? Is this part of your regional transportation plan? And that you're not trying to do something outside of your regular scope, but that people are moving forward with projects that are already in the plan and you want to move forward, and using P3 as the delivery mechanism to move that forward more quickly and more efficiently for all the parties involved. And then I think the last piece is really the public support and the public involvement, and be that from having enabling legislation, from having a transparent process where there are lots of parties involved and that there's general support both from the procuring agencies as well as in the broader public. We find that that's pretty important to be able to move forward and that you don't get this risk, as Dale was saying, you go a long way with the transaction, you get to the end, people spend a lot of time and money, and suddenly it ends up going another direction, and you don't really get to the financial close. It's very important to be developing a long-term and robust market.
Sam?
It's a real pleasure to be here with all of you today. City of Denver and Denver RTD should just be so proud. This is a magnificent facility. I'm not just saying that because AECOM was involved in part of the engineering work, or a lead in the engineering, but as Joe mentioned and Greg mentioned, really the leadership of the city and in Denver RTD and working together and collaborating with the private partners, not only for this, but for the Denver Fast Tracks project, which is occurring simultaneously, has really been a model for the rest of the country. And I can say that actually because I speak a lot on public-private partnerships. I sort of live and breathe this. And I was just speaking a couple days ago before the Senate Finance Committee and actually mentioned Denver and the work that the city is doing, especially with the Denver Fast Tracks project, probably about 3 times, to highlight the ability of RTD to really drive performance in the way that you're delivering new infrastructure, particularly light rail. That you're as Chris had mentioned, having the ability to, the certainty that the project will be delivered on time, on budget, and with full life cycle risk transfer over the long term. And that's new. It's really, you're a first mover in this market for light rail, and actually one of the first states or cities actually to use this performance-based model. So, with that said, it's such a tremendous foundation in moving forward and looking at other types of public-private partnerships, and from the private sector perspective, to come to a city, that the public sector already has a very strong foundation in P3 and has already approached it with the right mindset, and it was actually very prepared. It gives us considerable confidence in moving forward. As has been mentioned on this panel, having that political alignment, having the upfront due diligence and knowledge from the public sector has just been so critical. And also what is really also fundamental, that I'm not sure has been mentioned, is the financing tools that come from the federal government, actually, that has really enabled these projects to move forward. TIFIA and private activity bonds, which are both have served and been instrumental in moving forward these projects. Denver utilized these financing tools on the Fast Tracks project. These tools have enabled public-private partnerships to move forward because they've essentially closed the financing gap between 100% of taxable financing and tax-exempt financing. So now cities and states can move forward with these projects and know that they're not going to get the backlash that we're advancing a project with 100% taxable financing. In fact, that whole cost of capital argument is pretty much negated for transportation projects. So that's why we saw, after the federal government got involved and created these tools, since 2005, when the private activity bonds were created, a real flux of states moving forward with legislation. And just in the past 60 years, 16 transportation public-private partnerships have moved forward in the U.S. Worth $18 billion. And of significance, 8 projects alone, these are the states and the cities that had actually done the value for money analyses, they showed that they saved over $3 billion on the projects. And Denver is part of that, is definitely part of that number, with over $300 million in savings. So, I think there's tremendous hope for the U.S. market in moving forward. There's a handful of states, it has been mentioned, that actually have the capabilities, but as more and more states create these P3 entities, like the state of Colorado has done with the HPTE, which Mike Shirotis leads, the more confidence the private sector will have to come and join and be partners.
So what I hear with a common theme of all of you is that from the private sector perspective, predictability, efficiency in running a successful project, as well as track record that's established. But I think the commonality with all of that, or the common trend, is the leadership. And if you can speak just a little bit about the leadership of potential projects, and how do you distinguish a Denver from a Sacramento, or a Denver from a New York, right? And then also, if there are any other triggers that you have in mind when you say to yourself, looking and utilizing all of your very fine and keen analysis, this project can get to a financial close, and it's not a wasted effort of time spent and an inefficient use of your respective private sector time and dollars. And we are running a little short for time, and we want to get into lessons learned, so if you can keep your comments within under a minute.
Okay.
Dale?
Sure, I'd be happy to. I won't go into all the differences between Denver and Sacramento. A little bit of time. I think, in the leadership, they're pretty basic things. You hear a lot of states and local officials and others who talk about, yeah, we love P3s, we want to do them. So you're looking, one is for, the coherent legal and policy framework to do it. So, and that means legislation or legal framework that is actually designed to facilitate and make these things happen, not loaded with landmines and things that kind of disrupt or make the process unwieldy. So you want a quality policy and political framework. Then you also need some leadership in executing, both in terms of your elected and appointed officials who take the time to learn the complicated procedures, but also take it upon themselves to do the very, very hard work of explaining to the public and other stakeholders what it's about, and taking on the responsibility to do what we refer to as championing the project, meaning that you've got to really have somebody who is either the sponsor or someone who's really committed to seeing it through. And when you have those two things together, then you're going to attract high-quality private sector partners who are going to bring their talent and their ideas and others to the table, and you put those two sides together and you've got a pretty good start on moving forward.
So it sounds to me as if you've identified that there's one kind of taskmaster in a project, and you look for that. Do you look for that, or in your experience, has that one entity that is pulling everything together, through your experiences, has that shifted to another entity?
Well, let me, I've had the opportunity to work on 3 major P3 projects, with the Denver Eagle project being my third, and the technical elements, the engineering, and to a large degree, I would say the financing elements, are things that the expertise that we bring. But what typically is lacking is vision. And you need a vision, and I think that's the glue that holds everything together. And obviously, in this case, Phil Washington provided the vision that allows us to do all of these technical elements to come together. So I think it's more than just the administrative skills. It's what do I really want to accomplish? What does success look like?
And I would just say that all of these successful projects, in addition to having very strong, very committed leadership and that champion, they have to start with a need, and there has to be a need, and there has to be a fundamental, basic feasibility. It's not all about the P3 bringing money. It's about the P3 bringing a range of innovation, working with the public sector and the community and the local resources, be it labor, subcontractors, suppliers, and the businesses that are affected, and really providing that vision and making it real, starting to put it on paper, and providing the momentum that these projects need. And they do need momentum, and with that leadership and all these other factors coming together, you see and feel that momentum.
Any other things that would identify a project as ready?
The one thing that I may add there that's very interesting to watch is making sure that whoever the champion is knows what they're trying to get out of doing a P3. And that they have a clear vision of, I want project acceleration, I want life cycle, I want to be able to get some level of private innovation, I want this type of value for money, and really thinking about what they're trying to get out of their project and what they're trying to deliver to the community. And being able to articulate that really helps the private sector develop good solutions and be able to let all of the parties really develop and drive value, versus someone coming out and just saying, oh, P3 sounds like a great way to deliver it. Can you guys build this for us? Those tend to not have this clear vision, and it makes it harder for them to articulate to the stakeholders and to the community, this is why we're doing a P3 and this is what's so important. And I think the points earlier about something that Phil's team did really, really well on the Eagle P3 is going out and saying this is exactly why we're doing it. It's accelerating this project and others in the region, and that's I think very critical.
I would just, to add to Chris's point, I think it's fundamental that states or cities that are looking to advance public-private partnerships do these analyses up front, the feasibility and value for money analyses before the public officials go out and sort of announce this publicly. It gives so much more credibility and backing to their argument. There's a couple P3s in particular, one that the industry's been preparing for in the Northeast that has actually been sidelined because this whole sort of value proposition wasn't clearly articulated. And I think, you know, public officials have to go on the line. They need all the ammunition they can, and it's still a very new topic for taxpayers to get their arms around.
Thank you. Turning to lessons learned, we have a wealth of experience sitting up here on the stage, and if you all could just articulate from your perspective in the various roles that you've identified for the P3 projects that you've worked on in the U.S., what would be a takeaway lesson learned from some of the transactions you've worked on?
Well, yeah, first, really the same challenges that face publicly funded projects can also occur on P3s. So I think it goes to some of the points that were already provided. You have to do the analysis. The P3 is not a panacea, right? It doesn't cover up other levels of preparation. Probably another one I would say is there are different governance models, which goes to the education and learning point that was discussed at the previous panel. These projects come with levels of board participation, many partners that have to work together as one project, and it takes a lot to bring together in a cohesive way. So I think that's also part of the learning.
Anyone else would like to add?
Just quickly, I would say certainty, and we've talked about, you know, being able to start and finish. That's very important, and not just because of the expenditures that the bidders have and are committed to under a strong competitive playing field, but the certainty of starting a process with all the work done up front and finishing the process with a winner and getting about the business also impacts the financing. It impacts the investor base, the confidence that folks have into investing into the bonds on the Goethals Bridge that we were fortunate enough to be part of the equity investor, and we're now building from the banks of New Jersey onto Staten Island. When we went out to sell the bonds, we had the road show for the private activity bonds, several $100 million in bond sales, oversubscribed, a strong investor base of New Jersey investors because they had very high level of confidence in this project. They knew the need, they knew the project, they knew local labor was involved, they knew the contractors that were involved were going to deliver, they knew the Port Authority had done their homework. And that's, you know, when we talk about certainty and predictability and some of the lessons learned, it's more than just getting the contract awarded, it's across the board.
And just one more, I'd like to leave open time for questions.
Yeah, just kind of a really quick thought. I think one thing that we've seen is that precedent is very important in these transactions, and now there's some actually very good precedent in the U.S. market. But always remembering that what worked for one transaction, the set of covenant packages and particular terms in a contract may not be the best value for money for your project. And so making sure that on every project that the private sector is remembering to come in and being very thoughtful about what the public owner is trying to deliver, and that the public owners are being thoughtful about looking good precedent and then being very thoughtful for your project and what you're trying to deliver, how you can come up with the right mix of value for money to create value for everyone involved versus trying to just slice up a pie.
Any other quick comments before we
just
Sam?
Just to Joe's point, the amount of upfront due diligence that is required in these projects is significant. So it will take a bit more discipline and planning, and it's really so important for the public sector to have an understanding of what they want and what they want if it's a transportation asset, how they want it to perform, and to leave room for innovation from the private sector, not to sort of over-specify, but to sort of change their mindset from one of laying out every little detail to really thinking about, okay, how do I actually want this asset to perform? That drives the innovation in the bidding process. And also to leave room for communication with the bidders throughout the actual bidding process. It may seem counterintuitive, but the most successful public-private partnerships actually have significant communication with the bidders throughout the RFP, so you can sort of refine the project agreements and make sure that the projects are actually financeable and you're not transferring risks that are too onerous and are actually more costly to transfer from the public sector perspective.
It's a great endpoint. Thank you, Sam. I think we have a question in the audience. Thank you.
Thank you. First of all, thank you very much for the presentation. It's been exceptional, and we all, I know, appreciate and applaud your efforts. My name is Doug Tisdale, and I'm on the executive board of Dr. Cog and the mayor of Cherry Hills Village. And the governor has an important decision to make coming up now concerning Senate Bill 197. You heard some discussion before from the public side concerning that with Don Hunt's comments and so forth. Dr. Cog excuse me, has come out against that bill and would like to see the governor veto it. The Metro Mayor's Caucus has come out against that bill and would like to see the governor veto it. The public sector, therefore, has weighed in. I'd like to know if the private sector has yet weighed in on that issue.
You know, I'm always accused of maybe saying too much, but that's all right. You know, I think everyone in the private sector, at least speaking from our own behalf and review of it, understand some of the intent and the real goals of the drafting of the bill. Unfortunately, I think because you know, some of the challenges that have taken place, that perhaps there could have been a bit more input on. We talked about certainty and predictability and making sure that these projects can be delivered, and there's a lot of components that ended up in that drafting that can be handled contractually, and everybody understands transparency, everybody supports that and some of those elements. But I would say that the bill is going to be, in and of itself, as it's currently written, could cause some challenges within the Colorado P3 market going forward.
Hi there, really. Thank you for your time. I have a question that's more to the three really finance guys on the panel, and if we can make it a little concrete, because I love specific concrete stuff within the parameters that we have. How really lucrative for your investors are these projects? Dale, not to pick on you, but the numbers on US 36 were talked about. If you have an investment of $175 million, which is what was said earlier, and that's wrong, you can fix that, how much return are you expecting on that?
I would put it this way. At one level, you don't really know, because part of the purpose of this kind of transaction is you're transferring a substantial amount of risk to the private sector. And this project in particular, many of the projects that you see, the road projects that you see going on around the country today, are being done on what's called an availability basis, where the government retains the risk that there may or may not be as much traffic as everybody thought there would be on a particular road in order for the investor to be paid back. And so the government will put in kind of a backstop there and ensure that the private sector will recapture their investment. In this case, US 36 is being done as a revenue risk transaction, which means that we're bearing the risk that over the next 50 years that there will actually be enough growth in traffic on the facility. So there's always that risk, and you've heard of some of the stories and other projects where the investors lost everything in some cases. Now, we definitely don't think that's going to happen here. I'm simply saying that at some level, one can never know exactly what the return is going to be. I would answer it a different way in terms of just generally speaking as to what when you look at even some of the backers, the teachers, pension funds, and others that invest money with us, and what they're looking for is a relatively stable, low return over a long period of time. And that's the strategy that we have as well, is that we have a buy and hold strategy, which means we don't invest in these assets in order to build them and then 5 or 6 or 7 years sell them off to others at a high rate of return or to bring in other investors. Our whole company is built around a strategy of having a fairly modest rate of return over a long period of time, something like a corporate or bond rate of return. So it doesn't, when you ask for specifics, I can't tell you exactly, dollars and cents and those things. I'm simply saying that our business is built around generating a return that captures the money that we put into the project, makes us whole for the work that we'll do over the term of the concession, and then being compensated reasonably for taking the risk of doing that. Lastly, I would say that in this project as well, there are provisions in the agreement that require us, or not require us, but provide for us to share, if we make a certain amount of money at some level, then we'll share those returns with the public. So there isn't the risk that we're going to make a wild amount of money and simply run away with the taxpayers' money, because if we're doing well, at some point the public's going to do well here as well.
Great. Did we have one more question? I think we have time for one more.
Hi, my name is Jim Mulligan. Thanks much for coming. Just a quick follow-up to what Doug and Joe were talking about. Joe, you might recall back in 2009 when we were trying to draft this legislation for HPTE, your comment was make sure that you get the enabling legislation and the public policy right, because if you don't get that, you won't get anywhere. Now I see us moving on to social infrastructure. I've heard some comments today about that. Any warning signs about what kind of legislation or enabling legislation we should be concerned about in that regard?
I think that was specifically, I'll just say the legislation that is in place prior to this session is sufficient, is very, has protections in it, and has proven, based on the results, to be a successful piece of legislation. If there's tweaking to be done, it should be done in a very open and deliberative and thoughtful manner, and maybe not in the last days of the session and in a rush fashion. So I think to answer that, go back and revisionist history, I think Colorado did establish good legislation that the market has responded to.
Sam, did you have a...
Yeah, sure. And on the social infrastructure side, I would just say that you have a very strong foundation to work from the transportation side. The main difference, though, is on these social infrastructure projects, there is no user fee. So it's all performance-based delivery. And so the private sector is essentially taking the long-term performance risk. And they're also taking appropriation risk. So the legislation would have to be changed to reflect that. There is no similar traffic or revenue risk. There's potentially for stadiums there could be some user fees that are transferred, but it's a bit different. So there are certain states that have excellent legislation to model after for social infrastructure, like Florida, and so that's what I would suggest. And looking at ways that you can reduce the appropriation risk would obviously make these social infrastructure projects more financeable.
Thank you. Well, I'm getting my cue that we're out of time, but I would like to thank my panelists for a very robust conversation, and I believe they'll all still be around should you have further questions. Thank you very much.
Good morning, everybody. It's my pleasure to host you today at Denver Union Station. I'm RTD board member Angie Rivera Malpiedi, and I serve as the chair of the Civil Rights Committee. One of the components of RTD's Civil Rights Division is the Workforce Initiative Now, called WIN. WIN is a workforce development program that creates career pathways for people to be assessed, trained, and placed in jobs on regional construction and transit infrastructure projects. The project, which has been recognized around the nation, including by the White House officials, provides ladders of opportunity to break into transit industry. Since its start in 2011, some 350 people have enrolled in the WIN program, with 52 new participants enrolled in the first quarter this year. There's a 93% retention rate among WIN participants 6 months after being placed into jobs. WIN participants help build Union Station, and are currently working on the Eagle P3 project, the I-225 rail line, the US 36 Express Lanes project, and the North Metro line. The program has served close to 700 individuals with general career outreach, position referrals, and pre-screenings, enrollment, and or placement career planning. Okay, so today we have some of those folks with us to talk about the WIN project and how it has changed their lives. I'd like to introduce the moderator, Katrina Wirt. Katrina is the Director of Workforce Initiatives for Community College of Denver and serves on the Planning and WIN project and has been involved since its inception and development. So let's please give our attention to our new panel.
So good morning, good morning. The Community College of Denver is so pleased to be a partner of this innovative workforce program along with the Urban League and Denver Transit Partners. We're pleased to be partnering with RTD on this project, and we think it's innovative precisely because of the way that it leverages public economic development like the Fast Tracks expansion with education and training opportunities that benefit local residents and also employers. Now, the individuals that you're going to meet today are 4 of the 350 participants that have enrolled in WIN since we started about 2.5 years ago. Right now, this morning, there are over 200 WIN participants working on those 5 infrastructure projects that Director Malpiedi mentioned, building a better community. And the 4 that we have with us today are representing the Eagle P3 project and also RTD itself. And so let's kick things off by introducing yourself, the project that you're working on or the position you're working in, and also how long you've been a member of WIN. David, let's start with you.
How you doing? My name is David Ali. I'm a light rail operator here at RTD, and I've been in the WIN program since November of 2011.
My name is Sheila Mungai. I work with the Denver Transit Partners as their Quality Control Administrative Coordinator. I have been with the WIN program for 2.5 years, since December 2011.
My name is Esteban Rosa, and I've been with this project for about 1.5 years, and I do most of the construction for the Eagle P3 project.
Hi, my name is Dixie Brienza. I'm the Business Services Administrator for DTP for the Eagle P3 project. I've been in the WIN program for a little bit over 2 years.
So let's talk a little bit about the kinds of positions you had before you were with WIN. David, let's start with you.
I had what most people consider dead-end jobs. You know, I was truck driver, warehouse worker. Then I was unemployed for a while too. So.
Stephen, how about you?
I necessarily really didn't have a career. I was just kind of just going on and off jobs just to support my child. And this opportunity with WIN has given me, an opportunity to further my career. And I'm excited to be here, and it's been great. Great experience.
Okay. You know that individuals can come through WIN 2 different ways, through the general community and also through one of our WIN network partner organizations. So how did you personally get engaged with WIN? Dixie?
Basically, I was a casualty of the housing market crisis. I was a realtor in Atlanta. My mother passed away. My only child went off to college. I lost everything, and I always wanted to go west. So I eventually wound up here in Denver. I wound up in the Homeless Female Veterans Program, and I could not find a job. I looked for about 3 straight months, went through my savings, and I started working with a gentleman who was working with veterans in a workforce opportunity program for veterans. And he kept telling me, Dixie, hang in there. In the spring, the train's coming. I'm like, okay, Ed. So for about 6 months, he kept telling me that. And then one day, I got an email, and he goes, here you go. And I applied, and it was for the WIN program, and I was working on the Eagle P3 project. And I interviewed, and I was hired.
Great. How about you, Sheila?
I was also a casualty of the economic crisis down in Georgia, and a family emergency had me move here to Colorado. While I was here for about 1 year, I was working a lot of temporary jobs but not going anywhere, and I happened to come across one of your partners that introduced me to the WIN program, and went from there, got this position.
Great. So you've heard us talk quite a bit about how WIN is not just a job, it's about career pathways. So can you tell us a little bit about the training or growth opportunities that you've been able to achieve in the jobs that you have currently? Dixie?
Basically, I started out as a receptionist, and then I graduated to the Business Services Department as the administrative assistant, and then I became the Business Services Administrator. And like I said, I've been there a little bit over 2 years. My job is to support procurement, contracts, the public information team, the IT team, and my biggest job is the office manager, and I am very honored to be the office manager for the largest P3 transit project in the United States. So,
nice. Sheila?
Well, this position has opened me up to opportunities linked with auditing. Working in the quality control and quality assurance departments made me realize that I had an interest in this field. And seeing as I've been in the position for already 2 years, I'm working with the WIN program to provide training and certification for efforts towards me becoming an auditor within the next 5 years.
Great. So you know that this is an industry-focused program, and we're talking about 2 industries, transportation and construction, that are facing critical workforce shortages in the future. So as you came into these industries, what did you learn that was surprising or interesting to you about them? David?
Well, when I started here at RTD, safety, the safety thing, you know, how big it is, and to keep all this, you know, running, you know, from signal, power, MOW, to operators to mechanics. It's a lot of work to keep this transit department, you know, fully running on a daily basis. I mean, and, you know, putting safety first, you know, passengers and safety first.
Great. Stefan?
Well, in construction, I mean, just like David said, there's a lot of, you know, safety involved. You know, there's a lot of teamwork, communication, and you have to, you know, communicate with others because there's hazards everywhere. And surprisingly, it's really how precise how the rails have to be aligned, and you know how the trains are going to move forward. And it's a lot of mathematics, and it's really awesome to learn. So it's been great.
Great. So one final question for you. What would you like the audience to know about why programs like WIN are important? Anyone?
Yes. I think when this program first started, the whole concept Mr. Washington had was to make sure people who had jobs that worked in this community that the Eagle P3 program was going through. And that's what it has achieved, you know. Me personally, you know, when I came to RTD, I started out as an intern, you know, became a service worker, then I became a light rail operator. And the opportunities that still exist here at RTD for me, you know, great chance to advance, you know, and have a good career, not just a job. So I think that's the best thing about this program. It provided jobs for people that probably wouldn't have had a chance to get these opportunities, you know.
Great.
And just to piggyback on that, it allows the local community to become a part of the local economic development.
Excellent. Well, again, I want to personally thank each of you, and I hope you will join me in thanking the panelists this morning. Thanks for your time.
Let's give the WIN program another round of applause. What a tremendous for Phil Washington and his team who thought of the WIN program. Well done. I think, as the young lady sitting here said, it allows those of us in the community to participate in the economic development of the community, and that's the power of what we just saw here. Once again, will you also give the panel, the P3 panel, a round of applause, and what a timely conversation that was. Thank you all. I'm Michael Hancock, the mayor of the great city of Denver, Colorado. I want to welcome all the mayors from around the area, the region here. I see you in the audience. I heard you ask a lot of questions, and I agree. This has been a regional effort and a regional success. At this point, this concludes this morning's panels. And with all the knowledge and experience we've been blessed to have here this morning, we should
all know just about all there is to know about P3 projects and workforce development. What we've heard over and over today, and what we know very well here in Denver, is that it all comes down to collaboration. So now let's put the knowledge into action. Let's get projects done, and let's continue to put people to work. This is an amazing example of what can happen when we all come together and work for the greater good of the region. It's an honor to see all the fruits of the collective labor come to bear this morning and celebrate the reopening of this historic facility, Denver Union Station, the quintessential model for partnership and transit-oriented development. This is, as I've said over and over again with the number of media that's called from around the country, well, indeed around the world, a game changer for our region. This is the hub, but it is how we blend and how we're weaving all of our efforts and all of our desires to be connected together. I invite you all now to head up to the plaza area and partake in the festivities. The food trucks are open at 11 o'clock. And the grand opening ceremony begins at noon. Following the ceremony and ribbon cutting is a celebration and street party until 6 p.m. With lots of booth, free samples, live music, free samples of food. I realize we got to clarify some things in Colorado these days. We're going to have some live music and beer garden sponsored by the Wine Coop Brewing Company. So stick around and enjoy all the festivities that are here to offer today. On behalf of all of our slate of local, state, and federal and private partners, thank you for being here today, and let's let this party begin.